Hello everyone and welcome to the webinar for today on FX trading psychology. Today's webinar is brought to you by PhillipCapital Australia and is being presented by myself, obviously, Nigel Ormiston. So just a couple of things before we get into the webinar. Firstly, I'd just like to say that this is all general advice, so this does not take into account your objectives, financial situation or needs. So just take note of that disclaimer there. So for the agenda today, we'll be talking about three main points. The first one being the four major emotions of trading and how to avoid them. The second one is know thyself. So just talking a bit about personal trading strategies, how trading is quite personal and you would really need to understand your own personality and align that with a strategy that works for you. And then lastly, we'll be talking about tips on developing the right psychology for trading. So firstly, the first one of the four major market emotions is greed. So greed is the number one enemy of traders, all right? So greed in moderate portions, I guess, is what drives us to trade. You want to make money, you want to move forward, you want to move ahead in life, and that money will help you to do that, and trading is an avenue to make money. So I guess in small portions, greed is good, but don't let it grip you, okay? So basically, greed causes traders to stay in trades even though it doesn't support their trading rules. It causes traders to lose focus and all those sorts of things. So you might be in a trade, you might be long, say, Aussie US, the trade is going against you. Greed might cause you to hold on to that trade, or even worse, it might cause you to double down on that trade. So you might open a new position while that trade is going against you because you don't want to lose money and you want the position to move back, and therefore you're going to increase your leverage. So greed can do things to you that will be detrimental to your trading, and it's one of those emotions that you really need to harness. And lastly, that greed will never lead to consistent profits, okay? So consistent profits comes from having a proper trading strategy, taking this emotion of greed out of your trading decisions, and really eliminating it from your trading altogether. And there we have one of the great movies, Wall Street there, where it said greed is good, and he did a big speech on why greed is good. But when it comes to our FX trading and our short-term trading, we want to eliminate greed out of our trading altogether. So how do we avoid greed? So have a plan, have a strategy. So that's first and foremost when trying to eliminate greed out of your trading. And this will be a common theme throughout this webinar, talking about having a strategy, a trading strategy and a plan. We won't be talking exactly about what works for you. You'll need to determine that yourself based on what works for you and so forth. But you really need to have a plan and have a strategy, and you'll find that will take out a lot of the emotion of greed in your trading. It'll base your decisions on reason and also analysis, okay? So rather than going blindly into a trade and not really thinking the trade through, being emotional about the trade, entering a trade that you're not confident on, based on greed, it can really mess with your trading overall, and obviously can lead to losses, and that's what you don't want. Remain loyal to your trading strategy. So again, stick to the plan, stick to your strategy, don't deviate. And look, this is not an easy thing. It is hard to stick to your strategy and be emotionless in your trading, but it really will help you in the long run. And this is where you can practice your trading on demo accounts and so forth. PhillipCapital Australia have a demo account that you can download, and you can play with money that is not yours, and you can test your strategies, you can test your emotions, you can test how you're going to react to different scenarios and different trades that you get into. So it's really important to test your trading first on a demo account, and then progress onto a live account once you're comfortable with your trading. And even with a live account, you can start off with a small amount. We have a minimum of $200 that you can fund your account with, and that's a great way to get started without risking too much capital, but still having some skin in the game, still having some of your own money in your account. Okay, and lastly there, ensure a disciplined approach to trading to minimize impulse. So again, it's making sure that you're sticking to your strategy, you're being disciplined about your decisions, you're being thoughtful, and you're not going into a trade based on emotion or really just a reaction to what the market is doing. You're going in knowing that you're abiding by all your trading rules and you're sticking to your strategy to eliminate greed. Secondly, we have the emotion of fear. Now, this is another big one in trading, and it's really just the opposite role of greed. So fear convinces us that whatever we do will not be profitable. So fear will tell us not to trade. Fear will stop us from trading because we have the fear of losing money. Now, losing money is basically inevitable in trading. Now, that mightn't sound great, but what I'm talking about is that you will have trades that you will need to get out of and take a loss on. And that's just good disciplined trading. So having a stop loss, or if you're watching your trades, then having an area that you will get out and take a loss that you're comfortable with. Okay, so what will happen here is fear will stop you from even doing that. So really, you need to eliminate fear from your trading, because it will also freeze you. It will it won't allow you to think rationally about your trading either. So really, especially if you've had a few losing trades already, it's very hard to come back. You might have had 3 or 4 losing trades where you've been stopped out in the markets, and it's quite difficult to come back into the market and place another trade based on that fear of losing again. So that's where you need to be disciplined, again, sticking to your strategy and your plan with your trading, and not allowing that fear factor to enter into your decision making or stop you from trading altogether. So very important in regards to fear. So avoiding fear. So realize there is nothing random about successful trading. So realize that there will be losses, as I said before. You will be stopped out on trades, and realize that really there's nothing random about successful trading. Be convinced you're in control of your choices and stick to your plan. Okay, so this is where it takes some confidence in trading, not overconfidence, just being confident in your strategy and in your plan, and then executing that likewise. Remain calm and logical throughout your trading. So these are all great to just be able to say, look, they are difficult in reality, and that's where it takes practice. So I can't emphasize that enough, is to make sure that you are comfortable with your trading and your strategy before you're risking your capital in the markets. Now, as I said before, you can put a small amount of capital in that you're comfortable losing. We do have a minimum account balance of $200 at PhillipCapital Australia. So if you're comfortable with that, you can start placing trades. We allow micro lots as well. So you can start placing trades using micro lots and really just getting comfortable with the way the market moves, getting comfortable with the leverage, getting comfortable with remaining calm and logical when you're placing trades in the market and coming up with trading decisions. And lastly there, do not over leverage your account, okay? So this is a trap for a lot of traders, and this is one for greed as well, where traders will come in and put on large amounts of leverage onto a particular trade because they obviously want to make a lot of money. However, that will also cause you to lose a lot of money if the position goes against you. So always beware of the leverage on your account. Always be aware that if you're in a particular position, if you are going to add to that position, how's that going to affect your leverage and your overall account equity. So always be careful of your leverage and always make sure that you're comfortable with the amount of leverage you've got on any one particular trade. The third emotion is euphoria. Okay, so this works hard to ensure that wherever we look, we see nothing but wonderful prospects of limitless profits. Okay, so this can happen after maybe you've had 3 or 4 successful trades and you start to get that feeling of like, oh, I'm invincible. This is fantastic. This is easy. I can make money doing this. This is not a problem at all. It all of a sudden moves you away from your strategy and your plan, and you start to get into this euphoric emotion about whatever I do, I will make money on, which is absolutely not true. So making sure that after you've had some successful trades, you keep yourself in check and you don't get overconfident or euphoric in your trading. So even after you've had, even after every trade, always go back and analyze that trade. If it went right or wrong, why did it do that? And just take a step back from your trading so that you're not getting into an emotional state where you've entered a couple of trades, 3 or 4 trades, for example, they've all been successful, and you continue on that emotional roll, thinking that your next trade after that and after that's going to be profitable. Okay, so it's always good just to go back, analyze your trade, remain calm and logical about your trade, and then come back and make sure you're sticking to your strategy for the new trade that you're going to do. Okay, otherwise you get into this euphoric state where it will send you off course. So having said that, on the second point there, we can see that it results from a string of profitable trades as a trader comes to believe that their understanding of the markets is impeccable, and obviously there's that overconfidence, and it can trap you into over trading. So once again, just to reiterate that point, come back after each trade, step back from the market, take a deep breath, understand why that trade was a winner or a loser, and then moving forward, you can logically place your next trade based on your strategy and your plan. So avoiding euphoria. So obviously your next trade is always going to be a new trade that's not going to be impacted by the outcome of the previous trade. Okay, so just because you've had 3 or 4 trades that have won in a row, it doesn't mean that your next trade will also be a winner as well. So understand that you need to be sticking to your strategy and going into every new trade based on your plan, and knowing that you're confidently that you're placing a trade not on emotion but on what you've planned to do throughout your strategy. So the success of your next trade depends on how capable we are at excluding emotions from our study of the markets. Okay, again, so it just comes back to the emotions. So really, and it's very difficult to do because trading typically is an emotional thing to do. Money, we work hard for our money, and then you go and risk it on the markets, and it's not a nice thing to lose money in the markets. It becomes very emotional. You then want to get back at the markets if you've lost money, and then you get into this spiral of just emotions, and you move away from your strategy, and it just doesn't end up well. So really, the point of this whole webinar really is to understand the emotions that you go through when you're trading, and to eliminate those emotions from your trading. Okay, as I said before, PhillipCapital Australia do have a demo account, so we can provide you with a demonstration account that will allow you to trade money, just play money in the market, and you can then get a feel for how the market moves, test your strategies, test your trading plans, and then start off with a small amount of capital, because your demo account won't exactly mimic. I mean, it's easy just to place large trades in a demo account. You don't have the emotions behind it because it's not your money. So we always want people to be comfortable and confident when they're opening a live account, so that when they do trade their own money, they've had some good practice and they've been able to eliminate some of these emotions that can creep in when you trade. And reset after each trade. So as I said before, step back, take a breath after each trade, and then come into each new trade fresh and not having the emotions of what happened in the previous trade. Okay, so just while we're talking about the PhillipCapital MT4 offering, I just want to quickly go over what we offer here. So we've got spreads from 0.3 pips. Okay, and zero commission, so very competitive spreads. And there on the majors, we're fully regulated by ASIC, which is the Australian regulator for FX and CFDs in Australia. We're also straight through processing, so we don't take the other side of your trades. We don't run a dealing desk. We're not a B-book broker. So all your trades are sent straight through to our liquidity providers, and then we hedge ourselves on those trades. So we don't actually take the other side of them. So we want you to be successful in your trading at PhillipCapital, so you continue to trade with us rather than you lose your money. So we run that model here, and we think it's fair to all our clients. We're also backed by the PhillipCapital global brand, so we have 35 billion in assets under management and custody. And we've got 1 million plus clients globally, and we're in 15 countries worldwide. So feel free to send us an email or give us a call on those details below, and we can assist with any questions or account opening. Okay, so moving on to the last market emotion that we're covering in this webinar, and that is panic. So in a panic situation, the trader sees nothing but losses in the market, with no possibility of concluding a profitable trade. Okay, so this is where panic can really, in a similar way to fear, can freeze you, and you're almost like a deer in the headlights, not knowing what to do. If you've unfortunately over leveraged a trade and it's going against you and you're losing money, you start to panic, you don't know what to do. You want the market to go back up, but it doesn't, and you continue to lose money. Panic is a really horrible emotion, and it really just arises because you don't have, or you haven't stuck to your trading plan or strategy. It can make you become irrational as well in trading decisions, which most of these emotions will do. You become irrational, you can't think straight, and therefore you make silly decisions that aren't beneficial to your trading. So you can also relate this, I guess, to the equity markets as well, even though we're talking about FX CFDs in the equity markets, when we see a bear market that might go on for 18 months, 2 years or more, and panic starts to set in when people are sitting on losses for up to 18 months or 2 years, and they can't see anything in sight in terms of upside in the market, and they start to make silly decisions and selling at lows and so forth. So really, this is a result of not sticking to your strategy, and you never want to be in this position. And it also can come from over leveraging as well. As I said, if you're in a trade that you're not comfortable with the leverage on and it starts to lose, you do start to panic, and it exacerbates the fear of trading as well. So be very mindful of that, and always stick to your strategies. Don't over leverage, and therefore you won't. You can try and eliminate panic. So just going through 4 things there. So don't trade through major market announcements. If you're getting started in trading, it's really best that you stay away from market announcements, because there are typically large moves in the market at those times, specifically if it is a big announcement in the market, such as payrolls or an interest rate announcement for a large market or a large economy. So you want to make sure that you're not in the market at those times, having a position quickly go against you, and you start to panic. So keep your leverage in check, as we've said. Stay true to your strategy, which is pretty much the core message throughout this whole webinar. And breathe. Always remember to breathe. That will help you out in life in general. Okay, so having moved on from the 4 major market emotions, we're just going to talk a bit about how trading is personal, how really you need to work out a trading strategy that works for you. So typically, trading will affect people in different ways. You have to understand the type of person you are. So one strategy that works for one person mightn't work for you, and vice versa. So you need to, that's where it's great to practice your trading, test different strategies, test different trading plans to come up with something that works for you, that you're comfortable with, and it might be, you might be looking at different or other people's strategies, and you might take bits and pieces from those strategies, or different bits and pieces from charting strategies as well, and put them all together to make something that you're comfortable with, that works for you, that suits basically the type of person you are, or even your personality, and therefore that then is something that can work for you going forward in your trading, and you can have a better experience. So know your limits. So you mightn't like a lot of leverage. You might want to trade with small amounts of leverage because you're not wanting big returns. You're just wanting to chip away in the market and be very conservative, where other people might want to up their leverage a bit more because they're a bit more aggressive. So these are all the things that you need to consider about yourself. Consider about your trading goals, what you want to achieve and how you're going to achieve them, and then sit down and have a plan, and then start to test that plan and strategy. And what keeps you awake at night? That's a really big one. So if you're finding it hard to sleep at night based on your trading, then that type of trading is not for you. You don't want to be waking up at night thinking about or stressed about a position or money that was lost. Really, you need to be comfortable with your trading. You need to have your emotions in check, and you can't let your trading get in the way of your personal life as well. Otherwise, it starts to affect you in that regard, which is absolutely not what you want. So making sure that you're within your limits, even if that means lower returns, you're more conservative, at least you're sleeping at night. And that's one of the main things, okay? So always ensure that you're trading within your limits. You've got a strategy that suits the type of person you are, and that you're comfortable with that strategy. Okay, overconfidence. So 82% of students consider themselves better than average drivers. So men are more overconfident than women in areas like finance. And overconfidence leads to too much trading and taking too much risk. So that's one of the biggest things in trading is overconfidence. And as I was saying before, it can happen very easily after doing a couple of successful trades. You get overconfident, you start telling your friends how you're making all this money, all to have that evaporate when you go into your next few trades, and you lose that because you've been overconfident, you haven't stuck to your strategy, you've taken smaller gains and then let your losses run. It's not nice. So never become overconfident in your trading. Always keep that emotion in check. Pride and regret. So this is the old get even-itis. Okay, so this is where people get either frustrated with the market because they've lost some money. So it's like, I've got to get back at the market. I've got to beat the market. And you become like aggressive towards the market, and you become very emotional. Look, it's really important that you keep all this in check to make sure that you're keeping emotion out of your trading, and therefore you can, you can trade successfully according to your strategy and your plan. So trading out of winners too early and losers too late. which is a big mistake of a lot of traders. So being in profit and taking that profit too early. So you might have had a really good setup in your strategy, and you've entered that trade. It's made some money, but you've taken the profit too early and not let that run. But you've let your losers run because you don't like taking losses. So that's one of the major areas that we see in trading, where people will let their losses run and take quick profits. So you want to make sure that you've got your stops in place. If you find it hard to personally take a loss, it's actually been proven psychologically that it's 3 times harder to sell than to buy. And in FX trading, that just means to close than to open. And it's also a lot harder to close a losing position than a winning position as well. So always make sure that you've got those emotions in check, that you're sticking to your strategy. Okay, so just going through now some practical strategies to limit emotions in your trading. So as I've talked about throughout this webinar so far, is to keep to your strategy and your plan. So how do you get a strategy and a plan? Well, what you need to start doing is, as you're trading, keeping a diary to log your trades and also your emotions. And that will help you hone your strategy and your plan. So that's basically having a diary and each trade, just making a few points on why you did that trade, the outcome of the trade, and then the emotions that you felt in that trade while you're in the trade. And then that will help you to understand that if you're in a losing trade, what were the emotions that were felt? Why did you enter that trade versus your winning trades? So that's really important to do. And this might be something that you'll do when you start out in trading, or you might come back to it and revisit it time to time if you're a more experienced trader, just to keep yourself in check and making sure that you're keeping your emotions in check, especially if you're feeling emotional. So you've got to understand, why am I feeling those emotions? What emotions am I feeling, and how do I eliminate them from my trading? So review your trades to make sure you're sticking to your strategy, and making sure that your emotions aren't dominating your decisions. So that's really important as well. So you can also have a friend, a partner, or a spouse to give you feedback on your moods around your trading. So I'm sure they'll be willing to do that, more than willing to do that, if you have been quite difficult to be with around trading and you're having bad emotions from your trading. Okay, so always get feedback from people close to you that can provide that as well, and that's always good independent feedback. And write down your trading strategy plan and read it each time before you trade. So very important to have your trading strategy written down on paper, and then go back over it each time, whether that's if you trade each day, before you trade, read your strategy or your plan. But basically every time before you sit down to trade is just to go over your plan and make sure that it's fresh in your mind, that you're sticking to that strategy, and then you're not veering away from your strategy based on your emotions, or letting your emotions lead you off that. Okay, so coming towards the end of the webinar, so the key takeaways here. So we must minimize the role of emotions in our trading decisions. So really important, as I've said throughout this webinar, to look at, it's not whether it's possible to entirely eliminate emotions in a trading. Look, everyone's different, and there will always be some sort of emotion there, but the idea is to minimize the role of those emotions in your trading, so that you've got clear principled trading that's not based just on emotion, and that it's making you do silly decisions. Okay, so really important. Understand that success or failure are not related to luck, but they are logical consequences of your own choices. Okay, so look, when you have a couple of losing trades, don't think it's the market's fault. The market is always there. It's just the market's unbiased. It will basically do its thing, but it's up to you to place trades into the market and then get the right direction of the market at the time. So So it's not related to luck. So look, you don't want, if you're going into trading just trying to get lucky and placing random trades, then look, it's not going to work. You're going to have a strategy, have a plan. Don't over leverage, as I've said, and trade to your limitations. Again, you always want to be able to sleep at night. If you're trading beyond your limitations, then you'll know if you're not sleeping, or if you're becoming moody or emotional, then you're trading beyond those limitations and you're probably over leveraging and not sticking to your strategy. And lastly, there is discipline. Okay. Now, look, easier said than done. Look, this takes time to get a feel for the markets, to become comfortable with the markets, and to eliminate your emotions. Okay. But the best way to do that is you have your strategy, and that will eliminate. That's why a lot of people have automated strategies as well. Because if you've got a robot trading, then look, it's taking out the emotion of having to take that loss, or and obviously there's the benefit of having it trading 24 hours throughout the week if that's the way it is. But ultimately, that's why a lot of people use robots, is because it takes out the emotion of having to actually place the trades into the market, and it takes the emotion out of you physically sitting there and placing trades. So discipline is really important. If you are going to trade manually, then you need a lot of discipline, and that really comes through practice, and then taking notes, writing down the emotions that you're feeling, and then trying to eliminate those emotions going forward. Okay, so trading shouldn't look like this. Okay, so I once heard a professional trader say to me, he said, if you're sitting next to me and I'm trading, you shouldn't know whether I'm winning or losing. So you shouldn't know whether I'm making money or losing money, because there's no emotion in my trading. Okay, so that's probably not a bad guide. If you're getting frustrated, if you're on your desk and you got your head in your hands, or you're euphoric, look, it shouldn't look like that. You should be keeping the emotion out of it, and basically your trading should be like this. Okay, so calm and collected, looking at your screen, not knowing whether you're making money or losing money, because what you're doing is sticking to your strategy, you're sticking to your plan, you put your trust in it, and therefore it takes the emotion out of it as well. Okay, so there's just a couple of hot tips to finish up on. All right, so again, just talking about the PhillipCapital MT4 offering. So PhillipCapital Australia offers MT4. We offer spreads from 0.3 pips, zero commission. We're fully regulated by ASIC. We're straight through processing, so we're not a B book, we're not a market maker. We don't take the other side of your trades. We want you to trade with us and be successful, so you can continue to trade with us. And we don't want you to lose because we're on the other side of your trade. That's not us at all. So we're backed by the PhillipCapital global brand. So we've got $35 billion in assets under management and custody, million plus clients in 15 countries worldwide. So thank you for listening to today's webinar. I appreciate your time. And if you do want to contact us, feel free to phone or email using the details on the slide there, and we'll be happy to answer any questions and help you out with getting an account opened. Thank you very much.